very much, Julia, for allowing me to speak today. I think it's a great opportunity. My name is Eleanor Spencer, and I'm from the Zoological Society of London, ZSL, which many of you may know better as the organisation that runs London Zoo in Regent's Park. I work in the conservation department within ZSL, in a team that is particularly focused on engaging the business and finance sectors with key conservation issues. So there are three sort of main points that I'd like to make today. The first being quite simply that deforestation, tropical deforestation particularly, is as much an issue today in 2018 as it has been ever. The second being what those involved in sustainable and responsible investment, why they should be engaged with this issue, and thirdly, how you might like to approach it. So just as a very brief introduction to this subject, as I said, it's as much an issue today as ever. 2016 and 2017 were the worst years on record for tropical deforestation. In that time, we lost an area roughly equivalent to the size of Vietnam in tropical forest area. This trend is largely driven by the production of soft commodities in tropical regions. So in particular, there are four main commodities that are responsible for more than a third of all tropical deforestation worldwide. These are palm oil, timber and pulp, soy, and cattle. I'm going to focus on palm oil only today. It's one of the things that I work most on, and given time constraints. I'm going to just highlight some of the main kind of broad categories of risk associated with deforestation from palm oil production. So first of all, the impacts of palm oil, I think, are well known. They're widely discussed. I'm sure many of you are aware of them. These are some of the reports and campaigns just from the last 2 years alone on palm oil, mostly from NGO groups. And I think just scanning some of the headlines and images here, you can already see a range of ESG issues related to deforestation from palm oil, from endangered species across to conflicts with communities over land rights, and then, of course, the huge impact of tropical deforestation on climate change. That's something I particularly just want to highlight. Julia mentioned earlier how important climate change is to talk about. It's arguably one of the most talked about ESG issues, and protecting forests is crucial to any strategy that keeps us within a 2-degree warming limit. Agriculture, forestry, and land use, which includes everything that I've just been talking about as a category, contributes around 25% of all global emissions of greenhouse gases. Something like the transport sector, by comparison, contributes 9%. And yet, a lot of discussions around sustainable finance and climate mitigation tend to talk more about transport and renewable energy than about protecting forests. So just is a snapshot of some of the reputational risk involved with companies that are practicing unsustainably for palm oil. I think it also, one thing that's relevant to this audience, I think that it highlights, is that this is very much an issue in the public consciousness at the moment, and more retail investors will be concerned about deforestation as an issue and wanting to make sure their money is not financing it. So I think for those advising retail investors, it's important to really get to grips with this issue. A second type of risk that it's important to think about is regulatory risk associated with deforestation from palm oil. And this is nicely illustrated in the Indonesia haze crisis example that Julia referred to at the beginning. So this was in 2015, there was a period of several months where a combination of burning forests for plantation production and a particularly bad El Nino event that year meant essentially that Indonesia and Malaysia were on fire. The emissions from those fires at times exceeded those of the entire US economy. The cost to Indonesia's economy alone was around $16 billion US. More than 100,000 people are estimated to have died as a result of the smog that blew over from Indonesia, Malaysia, into other parts of Asia, including Singapore. So as a result of this, the Indonesian government slapped record fines on palm oil companies that were accused of burning that led to this haze, some of them as much as 80 million US dollars. It also led the government to issue a moratorium on new oil palm licenses, which just came into effect last month and will last until 2020. So it just gives you a sense of how regulatory risk can translate into operational risk for companies, which ultimately has an impact on those that invest in them. And then thirdly, I think it's important to think about the more direct financial risk associated with unsustainable production practices. IOI Group is one of the largest palm oil producers in the world. It's headquartered in Malaysia and has around 230,000 hectares of land under management for oil palm plantation. In 2016, following several allegations from NGOs against the company, one of which accused them of clearing illegally around 12,000 hectares of forest, this company was suspended from the RSPO, which is the sustainable certification body for palm oil. Immediately following that suspension, the company lost 27 of its major corporate buyers, including huge companies like Unilever, Procter & Gamble, and Mars. Its share price dropped 17%. It lost 750 million in market cap, and it underperformed on various indices that year. So it just gives you a very quick idea of how much of a financial impact this can have. It's also, I should mention, a good case study for the importance of engagement and putting pressure on companies to change, because following the huge pressure from this event, IOI massively improved its policies. It promised to restore the land that had been lost, and it regained its certification from the RSPO, leading Moody's to change its outlook from a negative to a positive one, and to comment actively about how important engagement with the RSPO can be as a profitability measure. So what can those in the room do to engage with these issues? Firstly, I should make clear that we're not a financial advisory service, so we provide data as a decision-making tool for the finance community. Having said that, we generally advocate for engagement over divestment, in the case of palm oil particularly, because it is the most high-yielding of oil crops. So if you were to substitute the palm oil demand with another oil crop, you could actually lead to greater deforestation overall because you'd need more land. And engagement allows you to push companies to improve practices on the ground, improve their policies, and ultimately bring the whole industry up to a higher standard. However, obviously, I know that many people will be using purely screening approach, and if so, then we generally recommend that you don't use certification alone as a proxy for sustainability, and combine that also with looking in detail at company policies and reporting, particularly because quite often company policies actually go beyond certification requirements. So it's important to dig into these issues. And then if I have time yet, just to quickly introduce the kind of main body of work that we do. SPOTT, this is a screenshot from SPOTT, which is the tool that we produce at ZSL. And it's all online, it's all free, and we look at palm oil and timber companies and assess them on the transparency and quality of their disclosure on key ESG issues. So we're looking mostly upstream at producers, processors, and manufacturers in those supply chains. We provide information across all of these categories based on publicly available information. You can break it down and look in a lot more detail online. I don't have time to go through all of it today, but please do ask me more about SPOTT if you'd like to understand the data that we have. And we also produce various reports and guidance documents, including this circled one which we produced with Aviva last year, which I think is a useful kind of introduction to this space. So please do have a look. And come and talk to me at any point if you'd like to know more. Great. Thank you.